Are you tired of jumping from one strategy to another without seeing results? My name is Loaded Forex, aka No Signal, No Entry. Last week, we received a powerful comment from one of our YouTube subscribers asking us for a step-by-step Forex tutorial on how to grow a small trading account. Honestly, it reminded me of the exact place so many Forex beginners and unprofitable traders start from. I'm talking about the days of small capital, big dreams, and zero clarity in the market without direction. In today's video, I'm breaking down the key to becoming a consistently profitable trader using a simple story every struggling trader can relate with. If that sounds good, don't forget to like, subscribe, and turn on the notification bell so you never miss another powerful Forex trading tutorial designed to help beginners Forex trader become consistently profitable. And also, if you want to be part of our free community on Telegram where you will get access to free weekly profitable signals and market insights, it doesn't cost you anything to join. Just click the link below this video description and become part of a trading community that is focused on helping you to grow and finally see consistent results. And I will see you after the intro. If I'm the one trading $100 trading account, this is what I will do. The first thing is to have a trading plan and have a master plan with discipline to follow the trading plan. What do I mean by trading plan? Is to ask yourself some question. How much are you willing to risk on the trade? Or how much do I need to make per trade to achieve my monthly goal in terms of percentage? A lot of beginner traders see their trading performance in terms of money, but you have to see it in terms of percentage. If you are making $20 at the end of the month on $100 account, it will not make sense to you because you are seeing in terms of profit or in terms of money. But if you see it in terms of percentage, that is 20%, which is incredible at the end of the month. Imagine you make this same 20% on $100,000 account, that is $20,000. You can see this Forex trading of a thing is a game of account size, a game of leverage, a game of equity. You need a big account to be able to pull out big money or big profit in the Forex business. But that is not the most important thing first. The most important thing is to learn how to make profit on the small account. If you don't have discipline and patience to grow small account, even if they give you big account, you will still blow the account. So you must master how to grow small accounts first before you plan to trade big account size. In this video, I will be walking you guys through the journey, how to have a trading plan, a structure that will help you to achieve a good performance while trading small trading capital. As you can see right now, this is my trading plan or journal, right? Then the account size is $100. Then the risk management is how I'm going to execute my trade on this trade. Another question I need to ask myself is that what is my risk appetite? On this account right now, my risk appetite is $10. Another question I need to also ask myself is that how much do I need to make to achieve my monthly goal? And what is my monthly goal? I just want to focus on 60%. Like I said, don't see your profit or performance at the end of the month in terms of profit or money, seen in terms of percentage. So what is the 60% of $100? That is $60. So I will be making $60 at the end of the month. So how many quality setup? Not quantity. Successful trading is not about taking plenty trades. It's all about taking or focusing on quality trades. And you can't see quality trades all the time. There are times you have to wait for 2 days, 3 days, 4 days to see that quality setups. But you have to wait. For me to achieve this, my 60% monthly goal on $100 capital, I have to risk $10 to make $20. So if I'm risking $10 to make $20, I will be taking 3 quality and solid setups in the market. If I'm making $20 on each setup, that means $20 multiplied by 3 will give me $60 profit at the end of the month, or 60% at the end of the month. So I have to plan myself very well, right? So I have 3 quality trades to take. The next session, I will be showing you guys the first setup that will help me to achieve my first goal. I'll be taking my first quality setup on gold using 4 hours time frame. As you all know, if you have been following some of our videos on YouTube, by now you should be familiar with the blueprint formula we use all the time, the loaded forex strategy blueprint. The first one is to establish the trend in the market, know the direction of where the price action is heading to, which is very, very important. The second one is the POI. You have to work with support if you are buying. If you are selling, you have to work with resistance. Then the third one is the entry. We use 30-minute time frame all the time, sometimes 15-minute time frame to execute our position. Before I forget, if there's any specific challenge you are facing in your trading journey right now, whether it's understanding a strategy, how to manage your risk, or even building a stable trading psychology, let us know in the comment section and we will make sure to cover it in the future content. If you look at what is happening on the 4 hours time frame of gold right now, you will agree with me that buyers has been the one ruling the market, right? After the buyers invalidated this short-term bearish market, lower low, lower high, lower low, lower high, then price created a new higher low here, higher high, higher low, higher high, higher low, higher higher low, higher high, higher low, then price created a new higher high. So the trend now on 4 hours time frame is bullish. So that means I'll be looking for buy setup only. I don't have any business with sell opportunity. The second step is POI. Since I'm looking for buy opportunity, I'll be working with support. The first step I need to do is to change the chart to line chart, then establish my zone, right? So I want to work with the body of this candlestick right here because price reacted here, reacted here, reacted here. Then I will now use my rectangle tool to establish my zone. Then I will delete the horizontal line, change it to line chart. Then after that, I have to cover the body of the wick as well. Right, let's move to step 3. Step 3 is our entry time frame, that is 30-minute time frame. This is where patience is very, very important. Patience to wait for price to come to our POI. These are POI. We call it loaded zone. This is where we'll be executing our buy position. We want the price action to retrace back into this loaded zone, then we take buy opportunity. On the 30-minute time frame, let's see what the price action will do. Right now, the price action is retracing towards our POI. Why? Price created a clear double top here. Price broke the neckline. That's confirmed a strong bearish sentiment on 30-minute time frame. So we have to wait for price to mitigate our zone before we execute this trade. On our entry time frame, there are entry criteria we follow all the time. The first one is weak rejection. The second one is volume reduction. The third one is change of structure, right? So without these 3 signs, no entry, no signal. The fact that we analyze that price action we buy inside this zone, that doesn't mean if price action mitigate the zone, we are going to execute immediately. We don't use pending order. We want the price action to mitigate our zone and talk to us and present all our entry criteria, the 3 entry criteria before we execute our buy position. If you look at the bottom of the candlestick here, you can see weak rejection while the price is approaching our POI at the bottom of the candlestick. That is sign number 1. Then the sign number 2, we want to see volume reduction while price is approaching our POI. We have a little bit of volume reduction here. Then the next candlestick is high volume, right? This bearish candlestick. So we can't execute immediately. We need to exercise another patience and wait for more volume candlestick reduction, right? We have another volume reduction around this zone. Then we have what's it called? Bullish. We have weak rejection at the bottom of the candlesticks. The third step right now is change of structure. There are two things you must put into consideration. Our 4 hours is our trend time frame, right? Is our trend time frame. Let me use T here for time frame. And what is the trend? Bullish. So our 30-minute time frame, we must also be bullish. 30-minute time frame must be bullish before we execute. That's why we need to wait for change of structure on 30-minute time frame, because sellers are the one in charge of the market right now, right? Let's exercise a lot of patience and wait for price to give us the structure, right? Finally, the price action changed the structure to bullish, right? As a result of the invalidation of this lower high on 30-minute time frame, price just invalidated this resistance, serving as lower high. Now, this place is going to be our entry time frame, because it was this bullish candlestick that invalidated the structure. Right now, we are positioning our long 2 here. We put our stop loss below here, then we target twice of our risk. Remember, I've seen a lot of beginner traders, they make this mistake. If they are risking $10 on a trade, they will make $10 out of that trade. That is not a good trading business. If you risk $10 on a trade, you should be able to make at least a minimum of $15 or $20. Sometimes it can be more than that, $30, $40 out of the trade. That is the profitable trading method or trading system. Don't risk $10 to make $10. At least risk $10 to make $20, $30, $40. So on this trade, we'll be risking $10 on our $100 trading capital. So our stop loss is $10. What we are telling the market is, if the price goes against us or move against us, we will only be risking, or we are willing to lose $10, right? And if the price move in our favor, we will be making a minimum of $20 on this setup. And you can see it, risk to reward ratio 1:2. If you are enjoying the valuable Forex knowledge we are sharing in this video, we would truly appreciate your support. Please take a moment to like this video, subscribe to our channel, and turn on the notification bell so you never miss another powerful Forex trading tutorial like this. Doing this helps the YouTube algorithm to recommend our videos to more Forex beginners and unprofitable traders who are eager to learn how to trade profitably. Our mission is to make Forex trading simple and easy to understand for everyone, whether you are just starting out or looking to become consistently profitable. Your support keeps us motivated to keep creating high quality Forex education content, powerful trading strategies, and market insights every week. Let's see what the price action will offer us on this trade right now. Now, finally, the price action smashed our take profit level. Let's record our trading result right now. We just make $20 on this trade. So that means we've been able to achieve 20% on this $100 capital. That is the first step, but we are still going to $60 monthly target. Day 5. It took me 5 solid days to wait for this quality setup. Remember, I've said quality trades are very scarce. You can't see it every day. You have to wait for days to see the quality trades. The question is, if quality trades will help you to achieve your monthly target, why can't you wait? Yeah, why can't you wait? If taking 3 trades, 4 trades, 5 trades will help you to achieve your monthly goal or quarterly goal, why can't you wait for the days that market or price action will present the quality setup? Successful trading is not about trading every day. It's all about waiting for the best day to trade your quality A+ setup. The second pair that gave me my A quality setup is USD JPY, right? If you look at the 4 hours time frame on USD JPY, you will agree with me that sellers are the one in charge of the market. Why? Because price created a solid resistance here. The sellers reacted here, then sold down and invalidated this low. This was serving as the last higher low during this bullish market, right? Then price created a new low here. Buyers took charge of the market around here. They bought back to this resistance to continue the journey of the bullish sentiment, but they failed. This resistance did not allow the buyers to push through, right? Then the sellers came in, they invalidated this low again. And this validates our sell structure formation, right? We have high here, lower high, lower low. And this is a bearish market pattern, right? The second step right now is to figure out our POI. Change the chart to line chart, right? You just have to figure out the zone where the price action reacted. Price reacted around this zone, price reacted here, price reacted here. So I need to cover all this zone by using my rectangle tool. When I'm done, then I delete it, change it to my line chart. So this place will be serving as loaded zone for sell opportunity. The third step right now is our entry time frame. We use 30-minute time frame for this execution. On the 30-minute time frame, you need a lot of patience to wait. That's why a lot of beginner or unprofitable traders are not making money consistently in the forex trading. Why? They can't wait. They are rushing. You know, I was rushing for a good 2 years. And at the end of the 2 years, na cho. No evidence, no result, na cho. And I asked myself this question. For good 2 years, I was not profitable. What's the problem? I was taking too much trades. You know, there's something inside me that is crashing my hand or my body that I must come to the market every blessed day to execute. But I did that for 2 years. I was not making money. Na cho I see. Until I started doing the opposite of what I was doing before. I was focusing on quality trades. I became a profitable trader when I started focusing on quality trades. When I started exercising patience, right? So this thing is very, very important. We have to wait for price right now to mitigate our POI zone, which is our loaded zone, before we execute our position. Right now, price action is inside our POI. And what are the entry criteria that we use inside our entry time frame or inside loaded zone? The first one is weak rejection. You can see at the top of this candlestick right here, we have weak rejection here, we have weak rejection here, we have another weak rejection, right? We have another weak rejection around this zone. So that's sign number one. The sign number two is volume reduction. Let's see if we can see more volume reduction. Right now, we have high volume around this zone here. We can't execute this trade right now. You can see the candlestick that bought to the upper side. It was a healthy high volume candlestick. Look at the next candlestick here, low volume candlestick. That shows that sellers are trying to take charge of the market. We need more of it. This is another low volume candlestick. That is a good sign that we are seeing our entry confirmation. The third step is change of structure. On 4 hours time frame, the price action is bearish, right? Then 30 minutes must also be bearish. Currently, the 30-minute time frame is bullish. If the 4 hours is bearish and the 30-minute time frame is bullish, don't execute. You have to ensure that the two time frames, 4 hours time frame, which is our trend time frame, and 30-minute time frame, which is our entry time frame, they are both on the same page. They are facing the same direction. On the 30-minute time frame, we have the structure, higher high, higher low, higher high, higher low, then higher high, higher low, then a little bit of higher high around the zone. We want the price action to invalidate this last higher low to the downside so that we can take sell opportunity. Finally, the price action invalidated the structure to the downside. We now have a bearish structure on 30-minute time frame. Then we'll position our stop loss above here. Then we target twice. We just want to make twice of our risk. We are risking $10 here to make $20. Simple as A, B, C. So if the price action goes against us, we'll be losing $10. If the price action moves in our favor, we'll be risking, we will be making $20. Let's see what the price action will offer us on this trade. Finally, the price action smash our take profit level. Let's record our trading results inside our trading journal. The quality setup 2, we're able to make $20. If you are enjoying the valuable Forex knowledge we are sharing in this video, we would truly appreciate your support. Please take a moment to like this video, subscribe to our channel, and turn on the notification bell so you never miss another powerful Forex trading tutorial like this. Doing this helps the YouTube algorithm to recommend our videos to more Forex beginners and unprofitable traders who are eager to learn how to trade profitably. Our mission is to make Forex trading simple and easy to understand for everyone, whether you are just starting out or looking to become consistently profitable. Your support keeps us motivated to keep creating high quality Forex education content, powerful trading strategies, and market insights every week. The final one right now is the last quality trade, the third quality setup that will help us to achieve 60% monthly targets. Remember, the system will be repeating: waiting, patience. So we still have to wait again. Even if it's going to take us 2 to 3 days, 4 days, 5 days, we are going to wait, right? Waiting is part of the strategy. Patience is part of loaded Forex strategy. Without patience, na cho. Without discipline, na cho. Let's dive into the third trading setup. The overall structure on 4 hours time frame right now, we have higher high, higher low, higher high, higher low, higher high, higher low, then price greater equal high. So where is our protected low? This place is our protected low. So the trend on 4 hours time frame right now is bullish. The second step is our PO high. Since we are in a bullish trend or bullish market condition, we'll be working with support. So let's change the chart to line chart. Where is our zone? We have price reacted here, price reacted here, price reacted here, price reacted here. So we want to cover all of this zone, right, by using rectangle 2. Let's change the chart to candlestick chart. Then we wait for price to mitigate our zone. The third step right now is our entry time frame. We scale down to 30-minute time frame. On the 30-minute time frame, we always use our confluences, right? The first one is the weak rejection inside the loaded zone. Second one is the volume reduction. The third one is the change of structure. So while the price action is approaching our PO high, we want to see volume reduction, right? Price created weak at the bottom of the candlestick when it mitigated our zone. You can see weak rejection at the bottom of the candlestick. That is sign number 1. Then sign number 2 is the volume reduction. You can see high volume here, then low volume, low volume, low volume, low volume candlestick pattern. That is sign number 2. The final step or final confluence is change of structure before we execute our trade. We want the price action to change the structure to give us a bearish structure. This place was the last lower high on 30-minute time frame, last lower low. Then this place is serving as the last lower high right now. So we want the price action to close above this last lower high to give us a bullish structure so that we can take buy opportunity. So let's see what the price action will do right now. Finally, the price action invalidated the structure to the upper side. This place is going to be our entry zone. Then we'll put our stop loss below here. Then we're going to target twice of our risk to reward, right? Ratio 1 to 2, simple as A, B, C, D. We'll be risking $10 here, then we'll be risking 20. We'll be targeting $20 profit around this zone, right? That is going to be our plan. Let's see what the price action will offer us on this trade. We have to exercise a lot of patience. Now price is dancing inside our stop loss zone, but if you take a loss, we are going to accept and move on. Remember, on our previous 2 trades, we've been able to make 40%. That is $40. Even if we lose $10 on this trade right now, we will still be left with $30. That is 30%, which is still incredible. So let's see what the price action will offer us on this trade. Now price is moving towards our TP zone. Let's see, price is moving towards our TP zone. Let's see. Boom! Price finally smashed our TP zone. Let's record it down inside our trading plan. You can see how we are able to achieve our monthly goal of 60% ROI on $100 trading capital. That is the end of today's video. If the information we have provided so far has added value to your trading journey, inspired you, or blessed you in any way, we would truly appreciate your support for the channel. The best way to do that is by simply clicking the like, subscribe, and turn on the notification bell, which tells YouTube this content is helpful and pushes it out to more traders who might need it. And don't forget to stay connected with us and continue receiving practical tips, strategies, and insights that can make a real difference in your trading results. Your engagement goes a long way in keeping this channel alive and allows us to keep creating valuable content for you and other traders around the world.